Welcome back, traders, to my market outlook on S&P and Nasdaq futures for the week of September 22nd. And let's go ahead and jump right into it, starting with S&P on the weekly chart. So looking at the last few weeks of S&P, we've dropped down into this fair value gap, but we didn't close it all the way. There's still a little bit portion left open, so I'm marking that as a reminder. Then we rallied back up, and last week we did close above this down candle, and we've also swept the all-time highs. Now this little sweep right here is kind of a shadow run, so I think that we could go for higher prices still. Now zooming into the daily chart, you can see we swept above that old all-time high and we closed back in the range on Friday. Now looking down, the first obvious fair value gap is right here on the daily chart. Price could come back down here and use this to bounce price and rally up for a new all-time high. However, that is not my ideal scenario. Instead, if you look at this wick right here, half of that wick, I've drawn this out. I want to see price not close below half of this wick. Instead, I want to see half of this wick being used as support to bounce price higher for a new all-time high, preferably early on next week. Now taking a closer look at the 4-hour chart, you can see half of that daily wick. We do have a 4-hour fair value gap that we used once already to bounce off of. We could come back into it once more and bounce off of it again. We could even wick through half of that wick, but like I said before, I do not want to see closure below this wick. Now, if you look to the left, we do have sell-side liquidity below these lows, but I'm not really seeing any inefficiencies here. And even when you look at the daily fair value gap, you can see that we've already went up, went down, went up, and then we closed back up. So there's no inefficiencies here as well. So this is the reason why I don't really like price coming back down into this daily fair value gap. I don't really think that's going to happen, although it could. I just much prefer we use half of that daily wick as our support to bounce price higher. Now moving on to Nasdaq on the weekly chart, the obvious difference between Nasdaq and S&P is that Nasdaq did not create a new all-time high, whereas S&P did. Now, for the past month, I've been telling you I don't want to see Nasdaq create a new all-time high, so that way we can have S&P divergence on the highs. However, I'm still looking for Nasdaq to come up and target this weekly SIBI, because if you look at the last few weeks, we've had a nice decline covering this entire fair value gap. And then we've rallied back up, and just last week you can see that we traded above these two down candles. So I'm still looking for price to come up higher to take out this swing high and come up into this weekly SIBI. Specifically, I'm targeting half of this weekly SIBI. Now zooming into the daily chart, you can see why I'm looking to target half of that weekly SIBI. I've said this before, if you look at the weekly SIBI, half of it is within a daily SIBI. So it's perfectly reasonable for price to come up and reach for that daily SIBI, especially at the low of that SIBI. So a more specific price target is going to be 20,414, which is the low of that daily SIBI. Now, when price come up above this high here, this is a perfectly reasonable place to take a partial around 20,262. So those are going to be my targets. Let's zoom in at the most recent price action to see the discounted raise that I'm looking for. Okay, zooming in for a closer look, we can see that the first obvious inefficiency is this daily fair value gap here. Price could come down to reaccumulate the sell side liquidity below these lows and dip back into this daily BISI. Now, if that does happen, I do not want to see price go below half of this daily BISI. I much prefer price to stay within the upper half of this fair value gap and then quickly move up to take my targets at 262 and 414. Now, even though that is potentially possible, that is not my ideal scenario. I much prefer to use half of this wick and half of this wick, and I want to see price find support in this area in order to shoot price higher into my target at 262 and 414. Since we're so close to my targets already, it doesn't really make sense for me for price to come and retrace so deeply before coming back up to hit my targets. Rather, I want to see price just go for this little inefficiency between the half of both of these wicks and then look for our target early on next week. So that's what I'm looking for going into this week. Now, should my targets get hit early this week, either Monday or Tuesday, I'll put out a daily outlook video to give you my thoughts for the rest of the week. So make sure you're subscribed so you don't miss the update. And if you got something out of this video, please consider giving it a like or leaving some kind words in the comment section. But until next time, safe trading.